Hello, this is Michael Lucy speaking from the Leave a Legacy and Not That podcast and video channel, the Sunderland Group, and also known on the street as a licensed life insurance advisor, retirement advisor, and asset protection advisor. The purpose of this video is to take a couple minutes and talk about alternatives to final expense insurance for people between the ages of 45 and 60, specifically healthy people. This video coincides with an article I'm writing of this same title that I had just described. And what I wanted to do is share with you, information about if indeed you are between 45 and 60 and you are healthy and you're thinking about final expense insurance, is share some alternative ideas with you. So let's get started. Number one, participating whole life. So people that purchase final expense life insurance are indeed buying whole life insurance products. Those policies all accumulate cash value. However, they do not pay dividends or interest on top of the cash value that is being accumulated. So the money grows very slow. Typically, those types of policies grow slowly over time such that at age 100, the cash value will equal the face value. Meaning, if you buy a $10,000 final expense whole life policy and you're 50 years old, at age 100, the cash value will equal $10,000. And then slowly over that 50-year period, your cash value grows. So with that being said, the feature of a final, it's just a feature. The cash value accumulation of a traditional final expense whole life policy is simply a feature. So anyone that's selling you on the feature of accumulating cash value is not doing you it's not doing justice. It's not helping you, and it's not working in your best interest. So if indeed you are healthy, there are some alternatives to final expense whole life insurance that will accumulate cash value and money a lot faster. Those are participating whole life policies, and I'm going to mention 3 companies out of the gate, maybe even a 4th, that are sound alternatives to final expense life insurance. So the first one I'm going to mention is Forrester's Advantage Plus product. It's a great product. I've myself have written many of these. I'm very, very fond of it. The face value starts at $25,000, so you're going to have to be willing to commit a couple extra dollars if you're looking at the $10,000 final expense whole life price range. You're going to have to be willing to spend a couple extra dollars to get into that Forrester's product. That Forrester's product is going to be simplified issue, and you're only going to be eligible for the standard health class, so you're not going to get premium rates. The second product is going to be Assurity life insurance. Very similar to Forrester's in that the rates and the cash accumulation, all of the features about the product themselves, they're almost neck and neck. So when you compare feature for feature, how fast the money's accumulating, so on and so forth, Assurity and Forrester's are pretty much equal. It's just a matter of preference on your behalf. The third company is Mass Mutual. I'm not licensed or contracted to sell Mass Mutual, but I'm offering it for you because it is a well-known policy, a highly thought-of whole life policy in the marketplace, one of the best. So Mass Mutual Whole Life, participating whole life. The last one is not necessarily participating whole life. It's not a participating company or a mutual company, but I've written many of these policies and I'm very fond of it. The cash value accumulation for this company will actually exceed Forrester's and Assurity in most cases. And the company is Securian, also known as Minnesota Life. The policy is Secure Accumulator. So the Minnesota Life or Securian Accumulator, Whole Life Accumulator. If you want information about any of those products that I'm able to work with, which is Assurity, Forrester's, or Securian, please do let me know, and I'll send you out some information, some brochures, whatnot. Next is another alternative strategy to final expense insurance for people between 45 and 60, and I love this one. This is great. It's a term ROP, or return of premium policy, a low face value return of premium policy. What I mean by low face value is you need to find a term policy that will go down to as low as, say, $25,000 worth of death benefit, which will actually typically exceed any amount of coverage you were looking for in final expense to begin with. Now, the key here is you want to buy into a term policy that's 20 years, maybe even 30 in some cases, depending on your age. So you buy into the term, and after the term, when you outlive the term, not if, but when you outlive the term, the insurance company will pay you back the premiums minus the small yearly policy fee that they charge you. So you're going to get back 95% of your premiums after you outlive the term. When you receive the check from the insurance company for the return of premium, you simply take that check, you deposit it into some kind of interest earning account, an annuity, or maybe even buy a single premium whole life policy for a portion of that money, and then take a couple $1,000s and go buy yourself a new car. But whatever you do, take a portion of that money, put it into an interest earning account or fund somewhere, and that becomes your final expense funding. And guess what? Since you got all of your money back for the premium paying years of term, it's almost like getting free life insurance. Sounds good to you? It's great to me. Sounds great to me. So I have written many of these policies, and I highly recommend this strategy for people between 45 and 60 that are healthy. Smoking will raise the rates about 20%, but once again, when you outlive that term, you do indeed get that money back. I'm going to mention two companies that you can look into for this strategy, and one of them is, once again, Assurity. They have a great term ROP policy, and the second company is Americo. The product is going to be HMS 100 CBO. CBO stands for cashback option. So that's the term ROP policy. I'm going to also just mention briefly a third strategy, and I've actually in the last month done two of these. And the third strategy is an IUL. And this is going to fit best for men between the ages of 45 and, say, 52. 45 and 52 that do not smoke. If you smoke, the participating whole life strategy is going to be better for you. But if you're a non-smoker, you're relatively healthy, a male, 45 to 52, an IUL, indexed universal life, or fixed index universal life, is a great option. For females, 45 to 55, 45 to 57, non-smoking, healthy, this is a great option for you. Now, I'm just going to introduce a concept here. When I wrote policies in the last month, what we did, or what I did, is I did a split ticket approach. So a split ticket is if someone has a need for X amount of life insurance, and let's just say X is 50,000 or 100, let's say 100,000. $100,000 worth of coverage or death benefit. The IUL is used in these cases for the customers I worked with for cash accumulation and retirement funding. And the more that you load into the IUL for life insurance, and life insurance is a vehicle that allows for both insurance and tax-free wealth accumulation, tax-free money accumulation. So if you load that IUL with term life insurance, you're not going to get the cash value accumulation out of it that you would if you just went with the minimum amount of life insurance in there. So the strategy that I'm proposing for an IUL for men between 45 and 52, females between 45 and 57, is a split ticket IUL term strategy where you purchase a term face value to cover the majority of your life insurance needs, and then you take the remainder of that budget and you put it into a small, a mini, a mid-size IUL with the minimum amount of life insurance to take advantage of the tax-free growth that you get out of the IUL. I will be doing additional videos and producing additional content about the split ticket IUL term strategy at later dates. But I wanted to introduce that right now because it's fascinating. It works great. If you're someone that has, say, $200 a month that you're looking for a life insurance option, you need some kind of death benefit or coverage, but you also have a concern about funding your retirement, this is something you seriously need to look into. So I've rambled on for quite a bit. We're at about 11 minutes right now, so I'm going to summarize this conversation in 30 seconds or less. If you are between the ages of 45 and 60 and you're relatively healthy, if you're healthy, and you're looking into final expense life insurance, stop. You're at a point in your life where you're at a midlife crisis, and there's no reason to jump off of the term life bandwagon and jump on over into the whole life bandwagon if that is indeed you. Between 45 and 60, if you're healthy and you're considering final expense life insurance, stop and look at 3 viable and extremely worthwhile and valuable alternatives: participating whole life, term ROP, and a split ticket IUL term strategy. That's all I have for now. Once again, my name is Michael Lucy. I can be reached by phone or text at 734-288-8323. Thank you for watching and have a great day. Bye now.